First, though, let's talk about what's going on with those retail earnings that we got from the various big retailers. Walmart, let's start there. Comparable sales in the United States specifically up 6%, which is 4 percentage points better than estimated. The company raising its forecast and also showing some stronger than expected numbers when it comes to its e-commerce sales. The CEO, Doug McMillon, saying in a statement, in the U.S., customers clearly want to get out and shop. So pretty much sums it up there. Brian Sozzi, what stood out to you from those Walmart numbers?
Yeah, simple analysis, Julie. Let's just keep it on moving. That's all we need here. But I just got off the earnings call with Walmart CEO Doug McMillon and CFO Brett Biggs, and two things that caught my attention. First, they strongly hinted that momentum continued into April. As a former analyst, whenever you hear something like that, you're thinking, all right, well, momentum also continued into May, and the second quarter is already shaping up pretty well. Ultimately, that is reflected in the company's guidance. Pretty upbeat second quarter outlook. Walmart also raising its full year outlook. Another thing that caught my attention off the call, personal care products are starting to improve as people venture back outside. Immediately, you're starting to think about, well, does a trade like an Elf Beauty work? Does an Ulta come out with good guidance in a couple weeks? That's some of the connecting the dots here that you would do after a quarter like Walmart put up. But overall, operating profits up in all segments for Walmart, faster than sales. That's always a key thing to look for there as well. Also, Walmart saying it's gained market share, and the way they seem to be gaining market share right now, whether it's department stores, whether it's grocery stores, they launched 30 more price rollbacks in the most recent quarter. In other words, they're cutting prices, they're gaining more customers, and that's why they're putting up results like this and raising their guidance, and you're seeing the stock up here pre-market.
Yeah, and I think this graphic we have up on the screen here is the one that really stands out to me, which is, people are spending more per trip at Walmart. So you have trip consolidation happening with their consumer. And I'm wondering how much, and I guess on the one hand, it doesn't really matter to the company, right? They just care that comp sales number, that 6% number we were showing, they just care that goes up over time. But you do wonder how it changes maybe the way you merchandise, maybe the way you think about sales, maybe the way you think about the layout of the stores, which of course are sort of iconic and generally static within a Walmart, because it is an overwhelming experience, and it is nice once you get the lay of the land of your local store to sort of know where you're headed. You do wonder if they see trip consolidation, so bigger spend per trip, fewer trips per month or week. If Walmart sees that as a longer term trend, and how that might change their business. Also, if you're bringing in an e-commerce component, a buy online, pick up in store component, I think we've all talked on this program most often about our food ordering habits, but it happens with online shopping as well. If you're not in person, you tend to buy a little bit more than you do when you're right there. I mean, if you want to tell someone like, maybe this food order is for two, but really it's just for yourself, those sorts of things. And you do wonder how much that plays into it. And then just to call out kind of a nerdy thing here, Walmart had its nice, or they have a nice big table of all their guidance, and they just had one little throwaway line on their consolidated expense leverage. Their prior guidance was that they would maintain their leverage rate or slightly delever. Their new guidance is that they'll maintain their leverage rate or slightly lever up that balance sheet. Maybe guys thinking about increasing the buyback or just looking at the credit environment right now and saying we can borrow and either buy back shares, either raise the dividend, or invest into the business. And when you have the kind of balance sheet that Walmart has, you have the ability to do that. I think seeing big companies want to either lever up or re-lever their balance sheets, a positive sign for how they are seeing the economic cycle playing out.
No, glad you mentioned that, Myles. And to that point, Walmart repurchased $2.8 billion of its stock in the most recent quarter. That was more than 2 times what they did last year. It makes sense. Last year, everybody thought the world was ending, so why go out there and buy back stock? 2 other things to note here. Sam's Club, the electronics business, same-store sales up high single digits. And we've been talking about for months about semiconductor shortages here. Well, Walmart is saying we continue to sell a ton of computers, and that likely benefits the likes of an HP, HPQ, you name it. At least looking through the prism of Walmart, the semiconductor shortage is not going to end anytime soon. People still want their tech gear.
Although we'll see as more kids go back to school, I wonder how much of that is fueled by at-home learning and how much that might change going forward. Let's talk Home Depot for a moment here too. I mean, the comps just blowing away estimates. Comparable sales of 29.9%, 22% was the estimate. Revenue, earnings beating estimates as well. The company's still not giving guidance, which is interesting. And the other thing that I'm paying attention to with the Home Depot, we're paying attention to margins for all of these guys, right? With Home Depot in particular, we've got that skyrocketing of lumber prices that we have been talking about. It looks like Home Depot is managing through that. Margins at Home Depot and at some of the other retailers seeming to hold up just fine in this environment, even with those increasing input costs, Brian.
Yeah, margins were the real story here. Their gross margins were only down 8 basis points, which is really impressive considering, to your point, Julie, you're seeing inflation not only in lumber, but likely in a category like power tools, because the likes of a Stanley Black & Decker or the big power tool makers are pushing through price increases because of rising steel costs. But you look at their operating profit margins on Home Depot, and I had to check this a couple of times to make sure I was right. 15.42% in the most recent quarter. Last year, 11.6%. Home Depot continues to be a good manager of expenses. And lastly, maybe I'm writing a theme piece in real time here. Home Depot bought back $3.8 billion in its stock last year. As we just mentioned, Walmart just bought back $2.8 billion worth of its stock in the most recent quarter. That's a lot of financial firepower being put to the market here.
Yeah, I'm going to be interested to see what Home Depot says or doesn't say on the lumber front on its call, because, Julie, I think as we've all sort of learned here with the lumber trade, Lowe's and Home Depot sit in a weird spot within that market and may not be quite as subject to the swings in lumber futures as maybe a home builder is, because they're not buying in the same bulk. But we'll kind of see how that plays out on the call. And on that, maybe it came through just a little bit here. Cost of sales were up very slightly more than the increase in overall sales. Cost of sales were up 32.9%. Net sales rose 32.7%. So just a little bit. And Sozzi mentioned how stellar the margins were compared to last year, but just maybe just a little bit of cost pressure. And then the opposite of what we just called out in Walmart was seen in Home Depot's results. Home Depot saw a faster increase in customer transactions, 447.2 million in the most recent quarter. That was up almost 20%. The average ticket was up about 10%. So unlike Walmart, where you're seeing fewer trips, bigger tickets, Home Depot is seeing more people come to the store more often. And while they are increasing their spend, certainly I think that shows probably a big boom, I would guess, in their DIY segment, because maybe not. Maybe contractors are going there more often, but I think you think people who don't exactly know what they're doing in a Home Depot, maybe I'm one of them, finds themselves going back maybe more than they need to as they begin a project and then realize, oh, I don't have this, that, and the other.
Yeah, it me, as they say. All right, let's take a look at Macy's finally to round out our big retail earnings today. That company coming in ahead of estimates as well. Comparable sales, although comp's a little wonky here, of course, because of store closures that started to begin in the first quarter last year, but comp's up 62.5% versus the 45% estimate. Macy's also raising its outlook for the year. Now, I do want to call out one difference between Macy's, among many, but one difference between Macy's and the others is that it hasn't lapped 2019, right? And as we know, you could argue that, and I know Brian Sozzi frequently has argued, that Macy's was in decline long before the pandemic hit. Now, it did see an improvement. It attributes that to its Polaris turnaround plan, and it did see lower inventories, although how much of that is a question of higher demand, how much combined with just short supply of stuff right now. So, maybe it was sort of managing well, but also got lucky. What do you think, Brian?
Yeah, Macy's has been the butt of criticism here on the morning show, no doubt about it. And since Macy's liked to put out the 2-year comparisons, or as Myles wrote in the Morning Brief newsletter a couple weeks ago, these stacked 2-year comparisons. So Macy's saying same-store sales on that basis were down 10% versus first quarter 2019. So despite them seeing an improvement year over year when all their stores were essentially shut down, sales versus the first quarter of 2019 still down. Now, if I did have to point out something positive here, Macy's noting their special occasion business, like dresses, fine jewelry, that business is coming back, which squares with what Walmart just told us they're seeing a return in personal care type products. So people are going back out. They want to look nice at the restaurant. Maybe they go out to a party. So those categories are starting to come back too.
You know, Sozzi, I was thinking about you, of course, as I was reading this release, and I was wondering, does a quarter this good for a Macy's actually serve as an indictment of management? I mean, how do you see that, on the question for the current group there at Macy's?
I think, and maybe you would appreciate this, Myles, this is a more macro-influenced quarter where the economy is absolutely roaring back from a pandemic nobody has lived through before. Everyone, and we continue to mention this, has outgrown their clothes, styles have changed, and you're going back to Macy's to buy new clothes. But I just went to my local Macy's in Berkshire, Long Island this past weekend. There's not a lot of inventory. This inventory was down close to 20% in the first quarter, and it looks like it in the stores. It's barren, it's depressing, and I don't know how many more quarters like this Macy's has up its sleeves.
We'll find out once the stimulus checks run out.